What is up, y'all? Today we're going to talk through everybody's favorite topic as a business owner. I'm saying that sarcastically because it is taxes, the dreaded tax bill. Specifically, we are going to talk through three of the biggest issues when it comes to taxes that are probably costing you big money. So, because taxes can honestly be one of your biggest, if not the biggest expense that you have as a business owner, right? And so it can be really easy to end up overpaying without even realizing that you're overpaying. You are listening to the Profit and Prosper podcast, the podcast where I will teach you how to take home a six-figure paycheck from your business without having to sacrifice your life today. So if you're new around here, you may or may not have realized yet that my other business, one of my businesses that I run, is Young & Co., which is a virtual CFO and tax firm where we provide strategic financial services to business owners who want to make an impact. Building Young & Co. was my first business. Actually started back in 2018. I won't go into my whole spiel, but I started doing bookkeeping and taxes, and then eventually transitioned into virtual CFO work, but we still do tax work. And I also am a CPA. You don't hear me talk about this as much on the podcast, at least over probably the last year, just because I also have built out my own personal brand and the High Profit Society, along with some one-on-one coaching and, mentorship type work. So that's really what you hear me talk about more, because I just love talking about business strategy and offers and profitability and all that stuff. But the CFO work, the financial stuff, the taxes is still a big part of what I do, and I think it's really important. So that's what we're going to talk about today, because when this episode comes out, if my dates are right, it'll come out not too long after the extended tax deadline in October. It's also a time of year when I know a lot of you are thinking about taxes ahead of time, because before you know it, it's going to be tax season again, and we're going to have to be thinking about your dreaded tax returns and having to pay your tax bills, okay? So we're going to talk about taxes today. We're going to talk about three of the biggest, most common issues that I see small business owners facing when it comes to their taxes. I'm going to give you some examples and client stories and tell you what you can do to actually fix these issues so that you don't have to overpay in taxes. Problem number one that most business owners face that causes them to overpay in taxes is missing out on tax deductions. So a tax deduction is an expense that you can take to reduce your overall taxable income. So you think of these like the most common business expenses that you're going to have on your tax return, whether it's your team, marketing, subscriptions, stuff like that. Those are all deductions that reduce the sales income, the revenue that you bring in from your business. When we review tax returns, I would say that easily 75 to 80% of the returns that I have seen are missing at least one business tax deduction, at least one. And for most business owners, every deduction you take is quickly going to get up into the thousands of dollars. And so this could be like hundreds to thousands of dollars that you're overpaying in taxes as a result of missing deductions. So I do want to say that high level, I am not a fan of buying stuff in your business just for the tax deduction. I know there's a lot of accountants out there who will tell their clients like, oh, well, you've got $50,000 in the bank. You should go spend that on stuff to get $50,000 of a write-off and reduce your taxes. And yes, that might save you, $15,000 to $20,000 in your tax bill, but ultimately you're still spending $50,000 and it might be on stuff that you don't need. You might have other things that you want to use that cash flow for. And so spending money just for the sake of saving on taxes is not a good idea. It's not something that I really recommend. That said, I think that when people miss out on tax deductions, it's usually when they've already spent the money and they just either forgot that they bought something, or they didn't realize maybe they're working with an accountant who didn't know their business very well, or they were working with an accountant who didn't specialize in business taxes and didn't even think to ask them about that particular expense. But in a lot of cases, they've already spent the money. They just haven't written it off on their taxes. So I think that the best way to avoid this is going to be to, number one, work with an accountant who actually specializes in business owners. I think the tax code by itself is already really complicated, even for us CPAs whose job it is to understand the tax code. Although I will say not every CPA specializes in taxes, so acknowledging that. But even for people whose job is in tax, the tax code is a lot. and there's a lot of rules, and it does change over time. And so I think, especially when it comes to business and real estate, those are two areas where I think the tax code is especially complicated and it's easy to miss if you don't specialize in it, if you don't live and breathe business taxes. So a lot of the mistakes that I see will come from people who have accountants who don't specialize in this. They're just kind of the traditional generic accountant who works with anybody who wants CPA services, or they do a high volume of tax returns. They don't actually have time to spend and really get to know your unique business and the industry that you're in. The second solution, and you're going to hear me say this a lot in this episode, is tax planning. So tax planning is when you sit down with your tax accountant well before the end of the year, so like right now, and go through your tax situation. You map out based on what you think you're going to do for the year in income. You map out what your tax return is going to look like, calculate your payments, and this is where you can sit down and talk proactively about what you can include on your tax return, what deductions you might be missing, so on and so forth. I do want to take a really quick second to plug a new resource that we made specifically for business owners that goes through over 75 different tax deductions, tax credits, and different strategies that my team and I kind of went through and brainstormed, pulled out of our tool belt that we use with our clients. I'm calling it the tax savings menu. It's this amazing document. I'm really excited about it, but it's going to walk you through over 75 different deductions and strategies you can use to save easily 4+ figures on your tax bill. So you can go download that completely free at trustyoungco.com/tax savings. Problem number 2 that is really common with business owners that causes issues on their taxes is having inaccurate records. This happens really frequently if either one, you're not using a bookkeeper a good bookkeeper who is able to keep up with all of your financials. Maybe you're trying to DIY it, or maybe you just wait until April 14th to start putting it together for a tax return that's due on April 15th. But inaccurate records is definitely the cause of a lot of tax mistakes I have seen, whether it's coding things incorrectly. I have seen clients, we actually had one come in where their accountant, they did have a bookkeeper. Their bookkeeper coded loan money, like the client got a loan for hundreds of thousands of dollars, and the bookkeeper coded that loan money as taxable income, which it is not. The tax accountant didn't question it, put it on their tax return, and their income was overstated by well over $100,000. We also had recently a client who had their revenue overstated by $50,000 because they were using QuickBooks Online and did not do the invoicing and deposits correctly and ended up double counting a bunch of their invoices. This actually happens all the time, like a shocking amount for people who use QuickBooks. They ended up double counting their revenue, which of course caused their tax bill to be overstated by over $10,000. I think a really common misconception about the tax prep process is that your tax accountant is going to be able to identify those errors. And I'm going to tell you that we can do our best to identify red flags, but if you read your engagement letter with your tax accountant, they're actually going to tell you that they're not doing procedures to identify errors in your financial statements, to identify fraud, to identify anything wrong. They're just going to ask questions and do a review to the extent that they need to in order to prepare a tax return that is as accurate as they can be. But ultimately, it's you as the business owner that is responsible for making sure that you have complete and accurate financial records. Even if you have a bookkeeper, even if you hire a tax accountant, it still ultimately falls on you as the person who has to sign your tax return. So I gave a couple examples of actual real life situations of inaccurate tax records, but honestly, this is one where it just frequently results in missing deductions, overstated income, incurring penalties and interest and things from the IRS for inaccurate tax filings. So really, the answer is just to take the time ahead of time to make sure that your financial records are up to date, that they are coded correctly, and that they're put together in a way that your tax accountant can actually easily prepare your tax return. So the solution here is to be proactive. Again, I think tax planning is really, really helpful because I know for my team, when we do tax planning, we're looking at your financials, and that helps us to, ahead of time before we're in our busy season, it helps us to identify potential issues in your financial statements, identifying red flags ahead of time so you can go fix them, because we're way more likely to find red flags when we're doing tax planning calls versus if we have to wait until February, March, or April when the team is just running from one tax return to the next, basically, to identify errors. It's just way more efficient and effective to have those calls ahead of time to make sure that you have a complete record so that you can do appropriate tax planning. Tax issue number 3 is huge unexpected tax bills. I think this probably causes people more heartburn than just about anything else, because a lot of business owners will be really worried that they're going to get hit with an unexpected, 5K, 10K, 20K plus tax bill in April that they were not planning for, and they all of a sudden have to, pull money from their savings or from their business in order to pay their tax bill, and that is obviously not what we want. So this was last year. This is probably the most extreme case I've seen of this. But we had a client coming in, and she had filed an extension on her tax return. And so my team went through and was able to prep that tax return for the prior year. We were in the middle of the next year, and she made so much money from the previous year and had already made so much money for half of the next year that she ended up owing, between last year's tax bill and catching up on the current year, well over 6 figures in taxes. And the reason that she owed this was because she hadn't reached out to a tax accountant who was in any way proactive, who was in any way, familiar with working with business owners. And so there was no tax planning. There was no strategy around how can we structure things to save on taxes. And so she just got stuck with the tax bill, because I think what people also don't realize is most of these decisions about your tax strategies and your business structure, you have to make those decisions up front. You can't usually change things well after the fact. And so it was hard, but she came in, we got her caught up. We said, okay, here's what you have to pay in order to get you caught up. And then going forward, we were able to be more proactive, but she had already just been in business, and it honestly grew so quickly, and she made so much money, which was amazing, but she hadn't set the money aside to pay her taxes along the way. And so it took probably, I would say, like 9 months for her to be fully caught up on taxes. And in the meantime, she was also really not able to put money into things like retirement investments, because all of her cash was going to taxes. Even though the retirement investments would have reduced her taxes, she didn't have enough cash left over after paying herself and paying her taxes to also be able to put into retirement account investments. And so again, the solution for avoiding an unplanned tax bill is tax planning. This is the third time I've said tax planning is the solution. But I truly believe that for small business owners, even if your business is small, I think once you're making $40,000 to $50,000 in profitability from your business, or even revenue, honestly, y'all, like once you're beyond just like making your first couple of sales, I think it's really important to have some level of tax planning done so that you can feel confident that you're doing the right thing, so that you can avoid these big mistakes, so that you can just feel good about it all and not be stressing about your tax bill as you think about upcoming tax season. But in tax planning sessions, as it pertains to tax bills, in a tax planning session, what you're going to do is map out, again, what do you think your income's going to look like this year, kind of comparing to last year, what's changing for this year. And if this scenario happens, then this is your tax bill. And that helps you to make sure that you are setting money aside throughout the year to get ahead of that tax bill. Now, a lot of people will give you the safe harbor payments, which is the minimum payment that you can make on your tax return based on last year's taxes. But if you're like this last client where her income was just increasing rapidly and significantly year over year, the safe harbor payment is not going to be enough to pay in your full bill. So if your income is increasing significantly, that's where you especially want to get ahead of tax planning so that you can save money as you go, so that you can be proactive about strategies to help you reduce your tax bill and not have to pay so much. All right, y'all. So I hope that this gave you some clarity around things that you can do to make taxes better, to help you save on taxes. Don't forget to go grab the tax savings menu. It's totally free. You get over 75 ideas for tax deductions, tax credits, and tax strategies to help you save 4 to 5 figures on your tax bill as a business owner. You can go grab that at trustyoungco.com/tax savings. So that's all I got for this week, y'all. I'm probably not going to talk about taxes again anytime soon. But if you have any other questions about taxes or anything like that, of course, send me a message over on my Instagram. Just send me a DM at @itssarahyoung. Or if you're watching this on YouTube, pop it in the comments under the video. I'm just curious if there's anything that you guys would like to learn about, if there's any topics that pertain to CFO work or taxes that you would like for me to dive more into. Obviously, that's a big part of the work that I do, just not something that I talk about as much over here. So let me know if you have any specific questions, and I'll see you back here next week.